Right, hi guys. This is a peeling the curtain back on what I've actually done with a client, a owner of a business in the construction industry. I won't give the business name because this is commercially, sensitive information. I've removed certain stuff, but I'll give you an overview of what we actually did to make the business a hell of a lot more profitable and exactly what the profit was an extra £163,665 worth of profit. But there's actually more of that to come, which I'll explain as we go in. But look, basically, this is a guy running a construction business, very, very good at what he does, gets a lot of work. The product is amazing, it's excellent, but just not very good at the time when we started. He's a lot better now, obviously, because he's worked and we've improved all this stuff. Just wasn't good at the finances, the business side, knowing the numbers, the costings, the expenses, profit and loss, all the really good key parts of running a successful business that you need. It's just not taught, wasn't good at it. So I thought I would give you a overview of what we actually did, like the process we did, step one through to step seven that I've got that we actually didn't tackle to turn the business around. So step one was all about just back costing jobs. Now it's boring, it's laborious, it's effort to have to go back and go, right, well, the customer paid me this much, but the job actually cost me this much. So it means going back through um, statements from suppliers, receipts, invoices, tracking back labour, all of that boring stuff. It's not exciting, but it is necessity to do. You have to understand where your business is. Every single job that you touch and do, you need to know exactly what money it made when you finish the job. It's all well and good pricing a job going, well, I think there's this much money in it, but you need to know at the end of every single job, bang, that job's done. It has made X amount. Fantastic. Let's move on to the next one. Or we did this wrong. We did that right. Where do you need to improve? You have to be on the numbers all the time. So we actually did 10 jobs. There's quite a lot of work here, but I'll talk you through this. So the net cost is obviously the cost to him to deliver the job. So we back costed the jobs and said, right, some of these jobs were actually complete. We said, right, for example, job one, that job has cost him £40,509 to deliver. Okay, that's what it cost him physically. What he actually got paid on that job, the customer paid him, excluding VAT, real money, 46,620. So that means he made £6,111 on the job, or in good money, 13.11 or 13.11% gross profit margin. Okay, so this gives us an understanding of where the business was at the time. But the key thing is, as we scroll through these, this was just 10 jobs. It's quite a decent sized company. There's a lot going on. But you see there's 11%, there's 16%, an 8%, a 5%, 14, 13, one that was at 20, 11, and one that was at 7.4. Now that is a fucking huge variation and one that's just not buildable or scalable. And it's all well and good having one job that makes money, but if you're doing five that don't make money, what's the point? You can't rob Peter to pay Paul. So every single job's got to make decent money. And if you can just solve that problem, you can see here that the average gross profit margin, as we've done our homework and gone back, 12%. Okay. And the total profit on all of that was 51,971. Now, I do know before we did this, there was some other jobs that were more like 6% and a lot lower. This is actually the start of improvement. So it was actually worse than this. But just talking you through it, right? So we just back costed the jobs, went back through them and said, right, what did they actually cost you? So that gave us reality and a firm grasp of where the business is at now. Then what we did is go, okay, well let's look at if we just sorted those jobs out at all. We didn't even win any more jobs, and we actually just priced work going forward for the amount of leads he's got coming in, and with a 20% clean, true profit margin on. You know all your costs, and we did that with 20%. This is the difference that it would make on that job. It would be £10,127 profit versus the 6,111. Basically, a 4 grand difference. As we scroll through, 3,900, pretty much 4 grand difference again. 1,700 quid, 6,700, 8,200, 3,003. That job was exactly bang on. We had one that was doing okay. 4,200, 5,555. That's the difference in profit by not doing any more work, just making the right money from every single job that you do with absolute confidence. Now, the addition in that was 40,916. So that's the difference it would have made. Okay. Now, the total, this is about a quarter's worth of work. So times that by four is £163,665. So that gave us a reality. What we then did was went back to certain clients because a lot of this work was booked way ahead, and we went back with these new figures. So this on this sheet, as you see it here now, is a forecast of what it should be for based on this quarter. We went back to certain clients and basically asked for more money and did that in the right way. This was a time of COVID as well, so there was opportunity to do that. But most importantly, all the new jobs were priced in this way, so it all scaled up, and then these numbers became a reality. And a year later, this is the figures that we're looking at. But there is more than this, and like I said, I'll get onto that in 1 second. The very next thing we did, step two, we look at all the overheads of the business. All right, what are all your fixed costs? You've got a very clear idea of all the overheads. So we had a real clear picture of going, right, okay, that's fixed cost. That's not cost of a sale. It's not cost of a job. They're all the fixed costs. Then step three, then we then priced work all at this 20% margin. And the way that we did that was basically using one of my sheets here and basically listing out every single item on the job. This is quite blank because it's just, I'm not showing you commercially sensitive information of someone else's business. But listing out every single element of work on the jobs, adding a profit margin on so you know very clearly, right, that's the margin, that's what profit is on it, and that is the charge out cost to the client. And every single job now priced at that higher 20% margin versus the average of like 12 and some at low at 6 and 7 and 8. Okay. Then what we did, we priced new work, like I said, with that 20% margin and won 4 jobs. So that gave the business owner real good confidence and clarity of going, okay, this works. I can charge a higher price and still win the work. Those 4 jobs were so pivotal because then it then changed his mind and said, yeah, do you know what? Fuck me. I can charge a lot more money, delivering a great service, but actually earning the company the right levels of profit without ripping a client off, just charging really good money. Those 4 jobs were then pivotal. Then basically went away and just rinsed and repeat and kept doing it. And then won loads of jobs for the rest of the year, all on that 20% margin. So the key thing is, the next thing was actually tracking costs. So again, this is my sheet here. What it would do is, so let's say this item here, you've got building control fees of 750. That's what's allowed in cost for him to deliver the job, cost to him. What you can do is, let's say it ended up costing you 900. It'll flag up and show you spent more on that item, you need to save money somewhere else. Or if it was the other way, it was 600, you're 150 up. So you're tracking costs the whole time. So you don't have to do the exercise that we did to begin with of back costing. You are live tracking the job cost, so you know what the job's going to cost you. And it works out at the bottom, like what the actual difference is versus like how you priced it. And that's what you really got to know. And that's what we did a lot of work on. And then lastly, what we then did, so as he went through it and we started winning a lot more work, now it becomes a bit of a game because he's so like booked up. We're actually upping the margin to more like 22.5 and 25% on jobs that he's pricing. So this 163 is actually going to go up because the company's growing. So he's actually getting more work anyway. But as you now start getting more confidence in your numbers and you've got a lot of work, you can start going in at 22.5, 25% margin. And that's the easiest money you will ever make because an extra 2.5%, 5% on these sorts of figures is all extra money. And that's basically what we did, and it's the strength of numbers, knowing your numbers, and being 100% accurate on it. And don't get me wrong, we had to go backwards and forwards quite a bit because it was a bit of a learning curve for him to get his head around this. But also, I helped him out with it massively. Just made it very simple in the space of literally a couple of months. Turned it around into this, and now the business is just going from strength to strength to strength because you've got that foundation of numbers. So I wanted to just show you guys what I sort of do with people and how it works. And that is it really. So if you need help with your business, you know that you're not quite in control of the finances, the numbers, all of this stuff, back costing, tracking costs, really being ahead of it and actually being on it, you can see the difference it makes to a business. You know, an additional 163 grand just on these numbers for the year is a huge amount of money, which is exactly why I stress that you need to get this right. And then when you do it, you fucking get it because you understand how beneficial it is in a business to know and really have locked in. If that's you, drop me a line below. There's a link below. You can book a quick call with me. We can have a chat and we can see how we can actually work together. So, hope that's been useful. Bosh.